to put the spotlight on the FMCG space and in specific Dabur and what Dabur's Q2 update really tells us. Let's get the numbers back in and actually the commentary as well. We have Abneesh Roy joining in. He's, of course, Executive Director at Nuvama Institutional Equities. Abneesh, hi, morning. Thanks for taking the call. And we're going to flash the Dabur commentary as we start the call. Now, what did Dabur say? Dabur is saying that sales are going to drop by mid-single digits. And they, I think, flagged off two issues. One is monsoon, so the beverage uptake was not as much as they would have liked. The second is this issue of inventory. They're saying that general trade got hit because of higher demand from quick commerce. And I think some inventory sort of management going on over there. What did you make of it? And the question is this just an inventory-specific, beverage-specific issue for Dabur? Or does it signal a wider concern for the rest of the sector and the rural recovery?
Sure, thanks. So first is we don't see this across the sector. So this is more specific to Dabur. In fact, we had highlighted last week itself that beverages will see a weak quarter. And that's why even Varun Beverages, we expect India volume growth to be only 5%. And even for Tata Consumer, Narishco will be soft quarter. And even for United Breweries, we expect 6% volume growth. So this was a result of very high rain. So we saw 8% higher than normal. So out-of-home travel was also difficult. And clearly the temperature was colder. Now coming to Dabur, I think apart from the beverages being slower in both Q1 and Q2, due to which the inventory got built up. And that's why there was a mismatch between the primary and secondary. They had to take this correction. Now in FMCG, pipeline correction is not something which is rare. It keeps happening. But the extent which Dabur took was very surprising. My sense is Dabur's forecasting across categories in terms of sales and demand, I think that needs to see some improvement. And we need to see consistency in terms of growth coming back from Q3 and Q4. Then the stock will re-rate. So we have seen 4 business updates in the consumer, 2 retail and 2 FMCG. So I can see 2-3 themes there. One is in urban demand, there is some level of slowdown. So what Dabur has highlighted also is that quick commerce is taking share from the general trade. But my sense is because of high food inflation in the perishables, vegetables, etc., and the telecom hike, urban demand, there is some level of slowdown and it is slower than the rural demand for most FMCG categories. Rural, there is some improvement.
Abneesh.
So that's why if you see Marico reported 5% volume growth, we expect Godrej also to see.
Abneesh, sorry, I'm apologies for interjecting. Just to make it very clear, one step at a time. First of all, the inventory issue and the softness, is that a Dabur specific issue? Yes, no, or is it a hazy answer?
Yes, it's a Dabur specific issue. So you will see a slight impact, say, on the other beverage companies, but this is more a Dabur issue. And that's why if you see Godrej Consumer, which is also in FMCG, we expect 6 to 7% volume growth, HUL 5%. Britannia, for example, we expect high single to double-digit kind of volume growth. Bikaji, again, double-digit volume growth. So all are in the broader FMCG. So this is more of a Dabur-specific problem.
But you're highlighting at the same time, while this is a Dabur-specific issue and others will probably have a decent Q2 growth, but at the same time, you're also saying that there is some slowdown in maybe in urban demand. That's the point you're making?
Yes, in urban, we are saying that in FMCG, there is some level of slowdown, which could be because of very high vegetable costs, say, in Q2 and the telecom hikes. In rural also, if you see telecom hikes are there, but for them, the perishable vegetable cost is not that relevant because locally produced. Plus the freebies given by the local state government and the central government, they are more than overcoming any impact of the telecom hikes. So rural, there is a recovery.
You know, before we get to Avenue Supermarts and what you made of the Q2 update there, just to complete the point about Dabur, how is QSR hurting general trade? Do we have any kind of anecdotal evidence? Because QSR spends are on the rise. So, you know, what are your channel checks suggesting and how much of a concern is this going forward?
I think your question is on quick commerce. Yes.
Quick commerce, yes.
Yes. So there is an impact of quick commerce definitely on the general trade. And companies are taking proactive steps to harmonize both. I think the quick commerce and the e-commerce and modern trade will keep gaining market share from the general trade. In fact, in big cities, now it should be bigger than general trade in many cities. So clearly, consumer is going towards convenience, and definitely companies also have to harmonize. That's why I don't think this is sector across sector problem which Dabur has faced. And this keeps happening generally when there is back-to-back 2 quarters of beverage slowdown. So they built up a lot of inventory and then they try to meet up the volume the demand through other categories. That did not happen because every category there's competition. Again, in same quarter, Colgate we expect, for example, 7-8% volume growth. So it is not across the thing, but definitely general trade there is some level of slowdown, and my sense is some part of it is market share loss to quick commerce.
Okay, and what about Avenue Supermarts? You're not very convinced about the like-to-like growth seen. Lay out your analysis.
Yes, definitely. We expect Avenue Supermart stock to be soft in the near term. There was a miss of around 3 to 4% on most of the metrics. If you see sales growth of 14% versus previous quarters run rate more like 18-19%, there was a 4% kind of a miss. And when we do the maths in terms of sales per square feet and sales per store, because these are the metrics which are available, again, we see that sales per square feet was only 1% in terms of productivity improvement versus earlier quarter, it was more like 4-5%. And similarly, in terms of sales per store, it was 3-4% lower. In terms of store addition for Avenue Supermart, I am not unduly worried. It is generally back-ended and they will get it right in Q4. But in terms of why this miss happened, this could be because there is some level of urban slowdown, and definitely quick commerce, Swiggy, Zomato, Zepto, etc. are expanding to more cities. They are more aggressive. So it could be that. It could be a mix of both.
Abneesh, just stay with us. I'm going to ask you about your sort of top ideas here as well. But let's just rewind the clock back and look at what happened yesterday. Abneesh is with us. Abneesh, thanks for waiting. So let's just zoom back on and since we're talking about China, somebody was talking about, what, say, for example, a company like Meituan is trading at. Valuations, market cap, and then you were looking at what Zomato here is trading at. So all kinds of things in the mix, just in terms of conversation. But of course, what we can do and our investors can do is take a call or not, whether they should buy names like Zomato and others. But what are your top ideas, top picks, Abneesh, from here on in the space?
Sure. So we remain positive on FMCG. Next 4-5 years, there is a coalition government at the center. There is competitive politics, populism at the states. We have seen freebies definitely increase. Good monsoons. So we are preferring companies which have higher exposure to rural. So currently we like Colgate, we like HUL, we like Bikaji, Britannia and Imami. Those 4-5 names will be the top ones in the staples. From a Q2 perspective, we'll be underweight on the Asian Paints and Berger Paints. Again, because of very high rains, the exterior paint demand has been impacted and there is a down trading. And the stocks had run up quite strongly because of the lack of success of the new players and crude oil correction. Some bit is now reversing there. Nestle also, again, more urban focused. So we'll be a bit cautious there in the near term. So the top buys will be essentially rural-focused companies. In the apparel, again, value apparel. So Trent and V-Mart will be the top buys.
Okay, thank you, Abneesh, for joining in. One stock of the day is going to be HDFC Bank. Just came out with their Q2 update. Abhishek joins in.